Hey traders, happy Thursday everybody. Welcome to Charts and Coffee. Rocking some new coffee today. Courtesy of the office. The mothership sent some coffee over. That's the Simpler Trading headquarters, by the way. And I've got the Four Sigmatic. It's coffee, but it's mushroom coffee. So we have some chaga in here. And is it lion's mane? So we're rocking the mushroom coffee today. Great to see everybody. Happy Thursday. All right, so let's get to it. See a lot of questions already in the queue. Awesome. Good morning. Great to see you all. I'll be seeing you all in the futures room shortly. We'll be doing some day trading this morning, scanning some crude oil, maybe taking a look at what's going on with Natty. Definitely the relation back to the oil stocks, which was something we talked about in the premium video, where index sector stock also works with futures, of course, if we're trading the indices. But what if we can go crude oil stocks, or crude oil ETFs like XLE, OIH, XOP, and then oil stocks? So that same sort of funnel approach definitely works, and I'll be stoked to dive into that. I also want to mention we're getting some good pullbacks, some really nice pullbacks within the context of, albeit some fresh, but good uptrends. And we're going to continue to look for opportunities to the long side, because why? That's the way it's going, right? Physics 101 does apply. So very, very enthusiastic about what we have on the watch list. And if your watch list isn't inspiring you, if your watch list isn't spawning these ideas, think about getting a little bit more hands-on with your watch list building. Think about finding and prioritizing those trends, because they are out there. All right, so Natty Gas. Hey there, Stephen. First question. So Natty's cool. It's been cooler, right? Natty's been better to us when it was trending. And if you haven't checked out at their Simpler Trading YouTube channel, last Friday, I think I did a Q&A specifically on Natty, what the implications of the seasonals were, what the implications of contrasting August to November are, and really what is sort of the last dance here for Natty as we reach an oversold level. And I'm looking for a bounce from here, but I need to see us really rally through 5.046. 5.046. Now, notice I'm not looking at UNG. I love that you asked the question, Natty. We're going to look at Natty Gas futures, and that's how Natty UNG ETF is going to track. So I do like that setup, but it's the last one. Is it my favorite? No. Would it take precedence over what we're seeing in crude oil? Probably not, but that's probably going to be the last dance for Natty, unless we get some sort of weather forecast update on maybe a more severe winter. I mean, those are the kind of things that would move Natty around. All right, next up, Debbie, OIH. Oh, I love it. All right. You mentioned in the video looking at SLB, how far for a pullback. Here is the entry around 32.15 or lower into the wave. So yes, looking at OIH. OIH is, as some of the folks in the mastery will say, it's a spendy one. It's a little spendy, right? That's a Lorna bot-ism. For those of you that are in any of the rooms, you know that Lorna's there helping out. It's a Lorna bot-ism. It's spendy. I don't like spendy options. It prevents traders from scaling in. It makes it a whole lot more difficult to control risk. So what I want to do is use an individual stock as a proxy. SLB, Debbie, that's a good one. And I think we're going to end up setting this up really soon. Now, look at where some of the support levels are, right? I'm going to look at some of those previous support levels. And your question was, would 32.15 work? You could even 32.15 is fine. I would even say 32.25, 32.20 is fine as well. I might even look at the area around 32.40. So pulling back looks great. I love where your head's at. SLB is a far more affordable way to trade the OIH. So good stuff. And we played this one before, got in on the dip, hit the target, and we're probably going to look to refire this one again. So good stuff, really good stuff. All right. So my thoughts on Ford and GM. Well, I'm a Ford girl. I'm a Mustang girl. So I love the dips in Ford. Ford is also my longer term holdings, and it was hard to believe that Ford was a stock that you could pick up under $5. I mean, can you get a coffee from Starbucks for less than $5? No, not to Starbucks. I'm just trying to think of something crazy. My favorite coffee place when I was in Korea for a couple weeks teaching years and years and years ago was a place called Seven Monkeys. They're everywhere. Seven Monkeys Coffee. Is that the best name ever? So I don't even think I could have bought a cup of coffee from Seven Monkeys for less than $5. But I could buy Ford. So in terms of a dip, yes, we have the 8 EMA potentially in play via the propulsion. 20 is a major psychological level that's going to, when we cross these decade levels, there's a different psychology that's associated with them. So heads up, I like the long. So my thought is, let's get long on a dip. GM, well, I'm a Ford girl, right? But no knock against GM. Those new mid-engine vets look pretty good. I know they're popping up all over the place. So in terms of GM, I don't like the structure as well as Ford, but I will say Ford's parabolic, and that adds a degree of uncertainty. While GM is not really all that parabolic yet, but it's a double green. And you know what I do in double green when it's all about the buy the dips. So that's what I would think. Let's focus on the long side of the market. Let's focus on a dip. All right. Garrison says, could I briefly go over my entry levels and profit targets for XLE? So my entry level can start as early as the 21, and it's gonna sink all the way into the wave, likely to about $55.50. On the way back up, look, we never want to be in a position to expect the market to make higher highs for little old us. One of the things I see a lot of traders do is they put on a trade and the first profit target's in the stratosphere. Don't want to do that. So look at the previous highs. I'll probably want to step out in front of $59.50. So that is XLE. Buy the dip. Those are my dip ranges. Don't expect for the first target to make a brand new high. Look, second, third targets, those could be in brand new blue sky, right? But not that first target. So there is the plan with XLE. All right, moving on then to XLC. What's my opinion of XLC? TT, it's my least favorite of anything in the NAS. Now, having gone yellow, I can start to take on a little bit more of a neutral opinion of it. We have been, so this is where it's tricky. I know my mastery folks out there. Shout out to you all. Shout out to you all. We're short. We're short XLC. It's not been an easy ride. We have been short. Some folks stepped out with a small unrealized profit before the Facebook earnings. Others hung on through that, but regardless, it's a short only position. However, the closer we get to the lower end of the range, the more we're going to start thinking about building a long position. We're still above the 200. We're still above the 0 of the V score. There's no reason for me to be overwhelmingly bearish any longer. We're stuck in a range, and I'm going to treat it that way. So probably the first thing that pops to mind, TT, is if I've got a strong NAS, I'd really rather look at what's going on with XLK and XLY And XLC is its own little world right now. It's choppy, but we want to probably from here on out start to focus more on a bullish bias, which means if we're short, we're going to scale out of those shorts nicely, luckily, uh, generously from XLC, probably at a minor profit, but then we'll start to recalibrate for the long side. Okay. All right. Next up is my thoughts on S. Hmm. hmm. It's trying to turn into an uptrend. I can't say I want to short it. Can't say I want to buy it. The pullback at least is more useful than being a buyer up in here, which we would never, ever want to do. But I'd say if we can dip back down into the wave, call one, it's fair game for a long. It's fair game for a long. Sun River, you got the coffee? Love it. Caffeinate and dominate. I got a little stir with that on there. Got this little, it's a cool little stir, and it says caffeinate and dominate. Yeah. All right. Probably my favorite thing from my birthday gifts, no doubt. My little coffee stir. All right. Next up is what are my top watch list candidates for XLY? Well, XLY itself, right? XLY itself for sure. We know XLY, of course, that's Tesla. A lot of folks ask me about Tesla, and Tesla and Home Depot are pretty much going to paint the picture of XLY. There's more in XLY, of course, but this move, what a gift. Hey, we were right here in Charts and Coffee where I said, buy the tweets. You know what I did? Look, it should get to the point where you say, oh my gosh, Rog, if you say wave one more time, if you say buy the dip one more time. But if I were to, I was talking to my husband the other day and he said, when do you feel like writing book number 4? I said, oh my gosh, it's going to be hardcover, 2 pages. Well, 3 pages, acknowledgments for all the people that I've been so lucky to have met and been helped by and guided by in my career. Page number 1. Page number 2, find the trends. Page number 3, buy the dips. Oh, there's a 4th page. The end. That's it. So you know exactly what I'm going to do. Buy the dip. Buy the dip. Buy the tweets. They are the gift that keep on giving with Senor Musk. So this is going to do what? That's going to move XLY. This is boats and tides, gang. This is what are the heavily weighted stocks doing in terms of influence on the ETF? How are the ETFs influencing the boats? The bigger the boat, the more it's able to affect the tide and even in some ways able to do its own thing. Amazon, not interested. I don't want to play Amazon at all. This is chop. Flip a coin, right? Got all my little daily stoic coins here. Flip a coin because that's what you're relegated to in chop. Find the trend and you're immediately going to find higher probability setups with the trend. Okay. So if I'm going to start to make my way down the XLY, after those top 3 names, remember, as you go down a high concentration weighted ETF, looking at the weightings, you're going to realize that as you get down past, in the case of XLY, past, say, the 3rd holding, once you get past that level, now you're into Nike, McDonald's, Lowe's, Starbucks. I want to look for the double green. That's going to be the priority. And if they're not double green, I'm going to move on. Nike is fine. McDonald's, just getting interesting now. Starbucks, yeah, it's a big cup of nope. So it might be a cup of coffee, but it's a cup of nope for the trades. So that's what I'm going to focus on. What is Tesla doing to the broader ETF? Can I play the broader ETF or what's double green within it? All right, next up is what are my thoughts on skin? Opportunity to enter or wait. Okay, JMO skin. Okay. So, well, the trend that preceded the chop was up. I'd rather be long, but you know what? I'm going to treat this a lot like I treat natty gas. So if you're saying, wait a minute, skin and natty gas, what do they have in common? Skin and natty gas? From a pattern standpoint, they're almost identical. So check out that video on natty gas. Forget that it's SKIN. Just think it's NG and start looking at oversold support levels. Focus on the long side for sure. And again, first step, focus on the long side of a market that has been trending and started to chop. Focus on the long side of a market that is trending. I still see folks looking at a double green. I know that everybody looks at all the color-coded skittles of my charts, but this is an 8, 13, 21, 34 conversation about the structure of moving averages suggesting the path of least resistance, the path of the highest probability in terms of direction. When I see folks stepping out in front of double greens, I'm thinking, oh my gosh, self-loathing, hate my money. So we definitely don't want to short double green. And we really want to give double green that's gone yellow the benefit of the doubt to the upside. So oversold, fade, buy at support. All right. Next up. Yeah, I saw the mud water, but I'll tell you what. Yeah, Trisha, I get inundated with that one on Insta. I think my sister tried it. But if there's no coffee bean, if there's no coffee bean, I'm very loyal to the coffee bean. They can add whatever they want, but there's got to be some coffee bean in there. But I have seen that one, and it looks like a very, very interesting concoction for sure. Every now and then I try to take a couple weeks off, a few weeks off of coffee, and I'll usually just go to tea. And then I'll go right back to coffee. But I thought next time I have my little coffee break, it'll be with something like a mud water. No, that's a great reminder. Thank you. Bank holiday today. Jamie, yes. So today is Veterans Day. So, I was looking at the volume and it's less. We have banks closed. We have school closed. Obviously the bank holiday means we're going to see less volume. And happy Veterans Day to those of you that served, of course. I don't know why we need a day for this. Every day should be sort of thanks. Every day should be Mother's Day. Every day should be Father's Day. Every day should be Grandparents' Day. And every day should be Veterans Day, that's for sure. Having said that, when we have lower volume, the opinion that we're seeing at the different levels, they're often going to be retested when the volume returns. Oddly enough, the volume is going to return on a Friday. So it's going to be tricky. As far as day trading, it's actually easier to trade in many ways when we don't have any major releases that are coming up. Although that doesn't mean that we may not have unscheduled events, which are typically going to be political or geopolitical, unfortunately. But for the most part, we have some clear sailing, even if we have lower volume. But I don't think it's going to affect our day trading. I'll be day trading in the futures room here in about 2 minutes. In about 12 minutes, but I'll be in the room in about 2. So my considerations are, I'm going to pay careful attention to volume. I'm going to pay careful attention. I've got to turn the TV on today because that's going to be far more influential. Somebody shows up, says something on the likes of CNBC, not to badmouth CNBC. They have a huge influence immediately, depending on who the guest is, on certain markets. So I'll definitely have to turn the dumb box on today. So those are my considerations. Just remember that the market can be broadsided by events that are not here. So challenging on one hand, but definitely tradable on the other. All right. Let's see. Next up is, how should a trader approach futures and equity markets with the bond market being closed for the holiday? Corey, the bond market influence, of course, I think I'd keep an eye on ZN, overall as it affects the NAS. But I'm for the fact that I'm focused more on crude oil and oil stocks today, and for the fact that I'm going to day trade, I can look at the VIX. I will tell you, the bond market is usually not something that I'm looking at for direct influence and correlation to the broader averages. So for me, Corey, because I don't rely on it for really a major factor of what I'm going to do, I like to trade it, but it doesn't mean that not having that information leaves me without confirmation tools to day trade. So for me, there won't be much of a change. There won't be much of a shift. Okay. Um, Here's a beaten up name, MHK. Oh, okay. So remember, if we're looking at something beaten up and it's in and how am I doing on time? I'm almost out of time. MHK. So remember, we want to think about where is MHK within the passive investing universe? Where is it within the, here we go, MHK, Mohawk, XHB, right? So I want to see that XHB and Mohawk are simpatico, and they're not. So I'd be really, really cautious on that. Singles Day. Oh, right. So we have Singles Day. I don't know. I know that was always Alibaba this, Alibaba that. I don't know if it's going to be this time around with Singles Day. Yeah. And Jimmy, well, you know what? So is my husband of 25 years, all 6'4", 245 pounds of him. So I appreciate that. And I hope you love the markets. Thank you for loving coffee. Thank you for loving charts. It's great to have you all here. I'll see you tomorrow, same time, same station. Be good to each other, gang.